Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula. Registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. Welcome into, and thanks so much for joining us here on America's Retirement Headquarters, home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners with Nolan Baker. 419-794-3030 is the phone number. Find out more about Nolan. The team at America's Retirement Headquarters set up a time to speak with them. ARHQ.com is the website. And again, that phone number, 419-794-3030. My name is Chris Swan. Today on the show, what are the signs that it's time to retire this year? Not having an estate plan could be a big mistake. We'll talk about it. And a terrible investment strategy in a down market. All this and more. But first, before we dive into it, let me check in. Nolan, glad to be with you as always. How you doing, sir?
Yeah, doing fantastic. I just got done with my second golf fitting, so looking to update some of my irons and drivers. I was able to convince my wife that it's got to be the clubs on why my golf game isn't so good. So for Christmas, she got me a gift certificate to get some new golf gear. So we'll see how that season goes. And then I'm also excited about, our upcoming car show that we're doing here at America's Retirement Headquarters. So we have a really fun event that's going to be coming up here on June 7th at the headquarter building here. If you have a cool car, a fast car, or just a car that you love and you want to join us for that car show, that's June 7th here at America's Retirement Headquarters. You can sign up for that event online at arhq.com. Just click on that events tab and we'll get you registered to come out to our car show. I did get one of my wife's cars out this last weekend. Her car, the nickname of it is Ruby. So Ruby's out. It's a hardtop convertible BMW from 2009. So just her fun summer car. And now that the weather's starting to get a little bit nicer, I think it's time to get that out. And when you come to the car show, you get to see Ruby and some other gems that'll be there.
I think it's safe to venture a guess what color car Ruby is. But again, find out more about that show and all the events and register for them at arhq.com. You mentioned golf, and of course it is very clearly the clubs. But, people out there, the Masters just wrapped up last weekend. And, all the best golfers, Rory McIlroy, for example, has a caddy to guide them along the way. As you get to and through, the road towards retirement, perhaps you need a little bit of a caddy, a little bit of assistance to make sure that you're really optimizing your retirement plan and your outlook. And that is what the team at America's Retirement Headquarters is here for. So again, that number 419-794-3030, online, arhq.com. Nolan, appreciate you taking time out of your schedule to spend with the listeners. Let's get your advice on dead retirement assets. Eddie Murphy, at age 63, he is still at it. Murphy made his breakthrough as a raunchy stand-up comic in the late 1970s. I remember the red leather suit there. And he tells Jimmy Fallon that's when he ran into the legendary godfather of soul, James Brown.
Backstage, he had to turn around and say, Eddie Murphy. He said, when you gonna start working clean? I said, what? He said, you gotta stop doing all that cursing, and you gotta make sure you get your money, any money you got, and bury it in the woods. And I was like, why it's buried in the woods? I said, the government gonna take your money if you have in the bank. The government will take your money. You bury that money in the woods. Oh my God. And I said, but can't the government take your land? And he said, well, they won't know where the money is.
James Brown, very famous for not having the best financial head about him. But burying money in the woods is also called dead money because it's not growing. What are some examples of dead money that might lie in a retirement portfolio, and how do you help resuscitate it?
Yeah, in retirement, you don't really have the time to have dead retirement assets in an account. And people oftentimes will come to me because of the explosion of social media. Anybody's willing to give you advice. People will forward me different social media videos on the hot investment tip that's out there. One in particular that's came into the office recently with people reaching out to us is talking about a company that is offering a very high payout rate, over 10% for selling student loans that are in default. And when you look at it, it's reading the risk analysis on the website and being the fact that it's not a publicly traded company seems to be kind of a high risk investment that could ultimately turn out to be a dead retirement asset. And, retirement is a point in your life that doesn't allow the luxury of time to make up for mistakes. You've really got one shot at getting it right. One of the ways that we do, and we utilize in our software, it's called the independent portfolio analysis. And within the independent portfolio analysis, we can digest and go through all of the different investment accounts and the holdings that you have and be able to try to communicate with you, where in your portfolio might be money that's working really hard for you. We can also look for any type of dead retirement assets that are out there. I have a couple of examples. One would be large cash balances for an extended period of time. Where interest rates are today, high interest money market accounts, those rates are much more attractive today. CDs and some of the fixed rate products that are out there have gotten to be much more attractive. But in doing a lot of portfolio analysis over the past couple of months, I still see people that have large balances and checking savings that are yielding almost nothing. If you have really over $50,000 in your local bank and you're getting less than 1% interest, that could be dead money inside of your retirement assets. There could be ways to make that money work a little bit harder for you. Number two, variable annuities with high fees. And one of the biggest concerns that a retiree has is outliving their money. And so, look, I get it. You want to have peace of mind to make sure that your money's going to last as long as you do. But a solution of a variable annuity is one that I don't typically recommend in most situations. There can be situations where it makes sense, depending upon what benefits that you select. But when you look at a variable annuity is typically going to have a mortality expense ratio. It could have a sub-account for the investments that it's in. It could have a rider fee. So if you have a income rider or a death benefit rider, and when you add up all of these fees and expenses, some of these higher end variable annuity portfolios have 3% annual fees and expenses. And so if a retiree is trying to target, let's just say, a 6% rate of return, if they have 3%, they have 50% of their money going out in fees and expenses, which is why I would think in a lot of cases that variable annuities could be a dead retirement asset. Number three would be speculative investments. And, we can think about speculative investments when we think about things like cryptocurrency. And, in full disclosure, I think having some cryptocurrency can make sense in portfolios. I actually personally have some cryptocurrency myself. I just think that you have to be careful with the amount that you have in those type of speculative investments. When we think of speculative investments, we're thinking about things that maybe are like penny stocks, companies that are at high risk. We saw some of these gaming stocks that people were jumping all in, that the price was going, up big and down big. And, that might be okay for some small part of the money that you can afford to gamble with. But when we think about retirees wanting their money to last forever, I would think a lot of those speculative investments tend to be dead retirement assets. More often than not, they don't work out. The fourth category would be what is called leveraged ETFs. When you invest into something and it has a correlation, let's say, to the S&P 500 index. So if you invested into a S&P 500 ETF, it's supposed to have a relatively about a 1-to-1 ratio of the market going up and down, meaning that if the S&P goes up and you're in an S&P ETF fund, you go up 1, it goes up 1. It goes down 2, you go down 2. You're getting the performance of what that underlying index is. But in the past, what has happened is there are ways that you can leverage it. So there's ETFs where you could get 3 times the return of when the market goes up. The trade-off of that, though, is you take 3 times the losses when the market goes down. Also, in a lot of those leveraged ETFs, they're really not designed for long-term investors. Because of the fact that they typically have much higher operating expenses, and leverage ETFs, I would say, tend to be kind of a dead asset in a retirement account. And the last one would be private deals. Again, most of these private deals you're going to find from advertisements on social media, a hot tip that you saw from a video that you watched. And what a private investment is something that's not traded on the stock market exchange. I also get very cautious about taking and investing money in things that are not invested directly on one of the stock market exchange. What I like about, the stock market exchange, I like about the insurance companies of America is you get, what you own. You can look up what that publicly traded company is worth. You can get the financials on websites like Morningstar. And if it's publicly traded and you decide tomorrow it's not what you want, you could sell it and get whatever that public price is. Some of these private deals, like private real estate investment trust, business development corporations, they tend to be illiquid type of an investment. So if this recession happens or the economy goes south, you could be locked into those portfolios and see severe declining prices, making that, again, another dead retirement asset. So what we can do for you, if you're wondering about an investment that you own, if you're wondering, is your portfolio optimized and maybe what could be the most efficient manner, you want to get your money working as hard as possible. Our office can put together that independent portfolio analysis and walk you through the ins and outs of all the investments that you own so you don't get stuck having one of those dead retirement assets.
It's as simple as reaching out and setting up a time, 419-794-3030, to begin that conversation. If your money is not, in essence, making money for you, well, you're technically losing out on buying power, which is as significant as a loss in the market. So finding ways to make it work and do efficiently is something that the team at America's Retirement Headquarters can help you with that independent portfolio analysis. Once again, that phone number, 419-794-3030, or you can go to the website. That's arhq.com. Wall Street has suffered some significant losses in just a short period of time in reaction to the Trump tariffs, and some bounce backs when they were paused. And it might be hard to not want to make changes to your portfolio. Nolan, what is a terrible investment strategy when it comes to down markets?
A terrible investment strategy in down markets is selling or buying based upon emotions. I recently had somebody had come into the office and got together with them. And, when COVID was happening a couple of years ago, she had gotten really concerned about what was happening into the market, and her advisor had talked her into taking her money out of the market, moving it over into fixed income. And if we go back a couple of years ago, back in COVID, when interest rates were low, she was getting only like 2.5% in her fixed income accounts. And so here we are years later, she's now that much closer to retirement time. Yet her fixed income part of her portfolio, which was a big part of, what she bought in that down market, never gave her the opportunity to come back when the market recovered in COVID. And it really wasn't here till recently, this tariff war, that we've got back to this emotional, concern that people have. So selling based upon emotions in the market is going to be another big costly mistake. What you want to do is you want to be realistic. With stocks down significantly, maybe from where their peak was a couple of months ago, maybe people are realizing that their risk tolerance wasn't, what they thought it was, especially when the markets come down. In our investment policy statements that we create for all of our clients, what we can do is we can show them within about a 95% confidence what would be the typical range of returns of their portfolio over a 6-month time frame. And so if you're listening and whether you're a client or not a client, if you don't have the investment policy statement, let's get together, and if you get a copy of your investment accounts to us, we can show you what would be the typical range of returns. Now, when you go through that exercise and you understand what your risk level is, if you're comfortable with that risk level, say that your risk level is negative 10% and your accounts are only down 6%, you really then shouldn't be in a panic environment because you're within those range of returns. You don't want to change your risk level based upon after something happens. You maybe want to make slight adjustments, but avoid making an emotional decision. And I think a big reason why people do that is, they can't control Wall Street. I can give you my opinion about what I think the market's going to do, but at the end of the day, I don't control what Wall Street does. And so investors will make a change to their portfolio because I believe that they feel that getting them a little bit back into control, but those decisions of, selling low can be costly. So you want to sell strategically. And selling strategically, you want to identify the specific purpose of what you own and why you own that. In our office here at Retirement Guys Formula, there's really 5 key elements that I like to look at when I look at stocks. I like to look at companies that are, cash rich, companies that are low debt, companies that have a high profit, companies that have a competitive advantage, and or companies that are needed on a daily basis. And so if I know exactly what I own, I would know when to strategically sell. So if I look at my companies on a monthly basis and I go through the analysis and maybe one of them has taken on a massive amount of debt, maybe their cash balance went down, that would be a reason why we would strategically sell. But if I look at those and I'm like, check, 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 they check all the boxes on the reason why we want to do that. But the market is panicking, meaning that other investors are just going into their 401k. They're not strategically selling. They're just selling the panic sell all button. That allows you to become a strategic buyer and buy things cautiously. And when you're looking at it, for the long term investments in the stock market, they go up, and over the long term, if you're sitting on cash and or you're patiently waiting, there can be some good ways that you can get that money to grow. Cash over time is probably not going to keep up with inflation. Mm-hmm. History has shown that over time, the stocks can be the great way to kind of keep up with long-term inflation. The other thing, if you're not sure whether you should sell, whether you should buy, the other thing that you could always do is do nothing. Sometimes doing nothing, and if this is the first time the market's tested your emotional aspect or your stomach for risk, history would tell you, and I will tell you, it's not going to be the last time we see this happen. Financial crises happen, pandemics happen, 9/11 happens, dot-com bubble bursts happen, housing markets happen, things happen, and you've got to be prepared for that. So just going in and making changes to your portfolio without a good thought process could be a costly mistake. If you need to reach out to us, we're here. If you're not hearing from your advisor and you're, wondering what should I do, I want to help you avoid making that terrible strategy in a down market. I want to help guide you through this process. We can take a look at things, determine if there's some strategic moves to make into the portfolio, look at where there are some cautious opportunities, because volatility can create opportunity if you know what you own.
It's easy to say buy low, sell high, or to quote Warren Buffett, be fearful when others are being greedy, be greedy when others are being fearful. It makes sense on paper, but if you don't have any guidelines, guide rails along the way, when you're in it, it can be very difficult. That is when emotions take place, and that is when mistakes can take place. If you have a plan developed ahead of time, it can really help you know when those opportunities are, when the actual time is to make those moves, to buy, to sell, and not just on a whim and really proving costly and maybe finding yourself in a hole that you can't dig yourself out of. The team at America's Retirement Headquarters, they can help you develop that plan, maintain that plan to, through, and beyond your retirement. All you need to do to get started is reach out, set up a time to speak with them. Not going to cost you anything but your time, and it could be some invaluable time as far as your retirement goes. 419-794-3030 is the phone number. It's 419-794-3030. And of course, you can always find them online, day and night, always available, arhq.com. I want to thank you so much for joining us here on America's Retirement Headquarters. It is the home of the Retirement Guys Formula, America's Medicare Associates and Retirement Tax Partners. Please have a great week ahead of you. Stay safe out there. Nolan, like I said earlier, appreciate the time. And as we wrap up, I do want to leave you with the final word.
Yeah, everybody have a wonderful week. I appreciate you taking time to tune in with us, and we will be back same time right here on Toledo's largest talk station, and of course your favorite media outlet. And just remember, when you think retirement, think America's Retirement Headquarters. We're here for your entire retirement.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.